The outlook of the Nigerian oil and gas industry post IOC divestments and exits, challenges and opportunities. Our spotlight is on this topic for the Topical Issues Workshop. Somebody once said that with the exits of the IOCs, if you go and bring any foreign company to come into the business, it will still be those of the size of Seplat and Watersmiths and Aradels that will come as foreign companies. So all the support they need, the independence in Nigeria should be given, make the most of the divestments. But the experts will tell us what their take is on this topic. To kickstart it, let's welcome our council chairman one more time to open this Topical Issues Workshop. Let's welcome Mr. Salahuddin Tahir.
Good afternoon, ladies and gentlemen. I'll start by apologizing. I was just explaining to the panelists that, we've been running this for years and we have to manage 3 days. One of the programs that always starts off a bit late is the TIW because of the opening ceremony, the exhibition, and then the lunch. We tried as much as possible to, ensure that it started by 1:30. We lost, 15 minutes because Richmond started speaking, and I really have to apologize on behalf of SPE. We intend to keep to time, and we don't want to keep anyone waiting. And a commitment here is that we will really see what we can do, again, because to ensure that in 2025, this program starts by 1:30. It gives me great pleasure to welcome you again to today's discussion. Really an important topic, not only for Nigeria, but Africa as a whole. The global energy landscape is changing, and we all know that. In Nigeria, we're witnessing a phenomenon that happened decades ago in the North Sea, where you see the majors exiting and the indigenous moving in to consolidate and take position. The Nigerian oil and gas industry has long been a cornerstone of the nation's economy. It has contributed significantly to government revenues and played, of course, a vital role in shaping the economic trajectory of the country. With this recent changes and exiting of the majors, as we would call them, the trend has, of course, sparked concerns and raised questions about the future of the petroleum industry. Concerns, but in any opportunity, you can have an upside, you can have a downside. So what does it portend for us in Nigeria? So we have a very high-powered panel that would discuss today. On a lighter note, I just want to, just single out Larry here. We started our career together, and we've always been, moving shadow to shadow. And I'm glad that he's also part of this panel. So from operational disruptions to potential job losses, the effects of these divestments are far-reaching and cannot be overlooked. Additionally, an industry holistically reliant on the expertise and resources of these major players will now need local companies to reposition itself to fill the void left behind. And for those of us that were on the exhibition, so you were there with us, you would clearly see that trend. You would see indigenous companies positioning themselves to take off. And it's quite exciting. So amidst these challenges lie a landscape ripe with opportunities. The divestment and exits present a chance for local operators and small independent companies to step into the spotlight and drive innovation and growth within the industry. Nigeria's oil and gas sector can be revitalized through increased indigenous participation, technological advancements, and strategic partnerships. We've been hammering on collaboration right through our events in SPE for the year. Collaboration, and we've been walking the talk. We've been collaborating with NAPE, AEC, PETEN, NGA, and the likes. Moreover, with the global energy transition gaining momentum, there is an opportunity for the industry to embrace cleaner energy solutions and sustainable practices, positioning Nigeria as a leader in responsible energy production. For those of us that were here in the opening session, you heard the GCO of NNPC. He mentioned LNG initiatives. And, it is really gladdening because we are actually pushing through to achieve, and expand our LNG capacity. I'm sure you know of Train 7. We have a couple of floating LNG initiatives that will come to fruition, and even mini LNGs in the country. This is unprecedented. And I'm sure in the next 3, 4, 5 years, we will live to see it mature to fruition. These are long-term projects, of course, and they need those minimum of 3 years and above to be actualized. So as we look ahead, it is imperative for all relevant stakeholders, government, industry players, and the local communities to collaborate and chart a path forward that addresses the challenges while seizing the opportunities presented. This will require strategic decision-making, investments in technology and human capital, and a commitment to sustainable practices that ensure the long-term viability of the industry. For those of us that were here this morning, I announced the theme for 2025. It might surprise some of you why we have human capacity in there. And be there in 2025 and you will understand why we think that human capacity is worth looking at in a conference such as ours. In conclusion, the outlook of the Nigerian oil and gas industry post IOC divestments and exits is marked by both challenges and opportunities. It is a pivotal moment that demands strategic vision, resilience, and a unified effort to steer the industry towards a sustainable and prosperous future. By navigating the challenges and embracing the opportunities, Nigeria can continue to be a key player in the global energy landscape, contributing to economic growth, job creation, and sustainable development. Ladies and gentlemen, stay tuned, keep your ears open. You would, I'm sure, get huge benefit from our array of panelists. Thank you so much.
Thank you very much, Mr. Salaudin Tahil, Council Chairman, SPE Nigeria Council. Onwards now to the panel itself. Let's begin the business. First off, on the panel is the Chief Upstream Investment Officer of the NNPC Upstream Investment Management Services, Mr. Bala Wunti, who is not able to join us, but has a reputable representation whom the council chair spoke about earlier. He is General Manager JV for NAICE. Let's welcome Olarewaju Igadon. You're welcome. The name's on the chair, just. Next, he's joined by an industry expert with years of experience and is currently overseeing the development and production of Nigeria's hydrocarbon resources. He has an extensive reservoir engineering experience, Executive Commissioner, Development and Production. Let's welcome Engineer Eronese Amadasu. You're welcome. Next is an industry expert who has a background in investment banking, but has since brought that into the industry, helping companies raise capital and develop resources for the benefit of the country and the industry. Currently, he's the managing director of one of the emerging forces of the industry, Chapal Energies Limited. Let's welcome Ofoma Joseph Emmanuel. To reduce your disagreements and encourage more of, conversations means that you need to have the right contract in place. And if you must have the right contract in place, you need a learned gentleman to do that. So on our panel, we have a learned expert on our panel who currently is a partner at the law firm of Olaniwon Ajay LP, one of the foremost commercial law firms in Nigeria. Let's welcome Folashade Oluyade. You're welcome. Next, we'd like to welcome the Managing Director of Matrix Energy Exploration and Production Company, a subsidiary of the Matrix Energy Group, one who has practical leadership experience that covers over 2 decades. Let's welcome Dr. Bukola Olushola. You're welcome. Next, we welcome another with over 2 decades of experience in upstream oil and gas segment of the energy industry. During his time in his current position, he has led his team at Oando Energy Resources and has led them efficiently to become one of the non-operated venture managers and so on and so forth. But this afternoon, he is the General Manager Commercial Oando Energy Resources. Let's welcome Akinbambo Ibidapo-Obe. This name is connected to a vice chancellor one time. Is it the same family? It's not. He says it's not me though. We know. Thank you very much. Okay. Fantastic. So we are now set for the conversation. And who is the captain of this ship who will sail it for us in the next hour or so and bring us to a conclusion, as our council chair has spoken about, is a senior lecturer at the Department of Petroleum Engineering and Petroleum and Gas Engineering and assistant director at Emerald Energy Institute at the University of Port Harcourt. Let's welcome Dr. Tony Oduntola. You're welcome. Please, for questions during this session, you can only engage with them via our app or our question card, which our hostesses can pass around. I think at some point we'll leave information on the screen for you real quick. How can we do that, Audion? Can we do that? Or if we can just put on the screen how they can engage with the panel as they're settling down. We'll do that later, yeah? Fantastic. So moderator, ma'am, is all yours from here. Please, let's give them one more round of applause as we get set to learn from their wealth of experience.
Good afternoon, distinguished ladies and gentlemen, and welcome to today's panel discussion. Sorry, just give me a second, please. My name is Toyin Odutola, and I'll be moderating this session. These apps. Okay, set. Okay. So today we'll be talking about the outlook of the Nigerian oil and gas industry post IOC divestment. We'll look at the challenges and opportunities, and it's my pleasure to serve as your moderator. The global energy landscape is undergoing significant transformation, with international IOCs, international oil companies, otherwise known as IOCs, divesting from fossil fuel. And then in Nigeria, IOCs are selling off their land assets and shallow water assets due to environmental concerns, security concerns, and economic concerns as well. According to oilprice.com, Nigeria has already seen about $21 billion worth of assets divested by 2023. That's last year. So you see, this is a huge amount of money. Therefore, the role of companies that are purchasing these divested assets is becoming more crucial, and that's why we're having this conversation today. So today, during our conversation, we will explore the environmental, economic, and security concerns and implications of this transition. We will also discuss the financing options available for DOCs and how regulators can support this divestment process. Additionally, we'll delve into the strategies that Nigerians can adopt to not only survive, but to thrive in this emerging landscape. Who knows, this divestment may just be the opportunity to foster innovation, enhance local expertise, and drive sustainable growth in the energy sector. Thankfully, we have with us today a distinguished panel of experts who are seasoned professionals at their various professions. So they are coming to this panel with various viewpoints, and they will be sharing with us from their personal experiences and the experiences of their organizations, how this divestment is affecting the country. And I also have here distinguished members of the audience, and like you've been told, there's an app. We would like you to be part of this conversation. Your views are very important to us. Your views will help enrich this conversation. Thank you. So I'll be calling on my panelists to give maybe a 3-minute overview of this topic. And I'll be starting with the lady, Mrs. Folashade. What do you think about this topic, the outlook of the Nigerian oil and gas industry post IOC divestment and exits?
So just to say that you didn't disappoint me. I knew you were going to say ladies first. So thank you very much to you, our moderator. And of course, I'm very happy to be on this panel. When I saw this topic, it was clear in my mind that I don't think there's any time that is so apt, for such discussions. I mean, I have been privileged to work on a number of, these transactions, these divestments going on. And to be honest, I've been more on the transferee side, that's the buy side. But then, there is just a lot to learn. So the topic, challenges and opportunities post divestment. I think I'll start from maybe sharing what I think are the opportunities that I see, or that I think abound, in the sector. A lot has been said. The IOCs have been here for decades. They've milked, permit me to use that word, the industry. And now they think it's high time to go, right? Of course, a lot of reasons have been cited for their divestment. Initially it was, of course, security issues. You've alluded to environmental concerns, and all whatnot. And then later it was, now the policy is now changing. We are moving to cleaner sources of energy. They need to, sort of move their strategy towards, cleaner energy sources, and so they have to divest. No problem. Thankfully, we've been having participation by indigenous companies as far back as maybe 2010, thereabout. And going by the examples of the early entrants into the sector, we've seen a lot of success stories. Sepplats of this world, Smiths of this world, they're there. We don't need to mention all of them. Opportunities abound, value creation, job creation, capacity building, the ability to unlock, these stranded assets, so to say. And somehow I thought to myself, when you have more indigenous participation, just maybe we can begin to see more or less of restiveness in those communities. Maybe there'll be more, and should I say, welcoming when they see that, it's now we, that we're doing these things. So the opportunities abound. And of course, the challenges. And I think one challenge that, would quickly jump at me, at least from my experience, is, the access to finance and funding. There was a time, or there was, some move away by the traditional financiers, the banks, private equity investors, and all those from, financing oil and gas assets. But I think in recent times, we are now seeing, again, some sort of willingness, to participate and to fund. But when these DOCs, get these assets, they need the financing, right, to unlock the value, to develop the assets. And so it's critical that they're able to access, the financing. So that's one challenge. I mean, thank God for
challenge, yes.
Yeah. I'm talking about the challenge, yeah. Okay. And so, thank God for the initiative for the African Energy Bank and all those things, which is supposed to sort of help in that regard. But hopefully we'll see more, participation. Access to funding is critical. And, there's also the need for indigenous companies to sort of, align their strategies with what would be favorable or attractive to international investors, things around ESG concerns, and, all those things that they're looking at, when they want to see whether they need to invest in, things that, those IOCs had, without, without blinking your eye, and they were able to get enough, in that regard. Okay. And so, just one more point I'll just make on challenges. Sorry, sure. Is on the issue of host communities. And I mentioned earlier on that maybe as we see more indigenous participation, maybe you see less of the restiveness. But then this is a critical issue that DOCs then have to develop strategies on how to, work in these communities to ensure that they get, optimal value, from this.
Thank you so much, Mrs. Folashade. I hear you. You said about the opportunities, the job that this divestment is bringing. You talked about how hopefully we'll have less restiveness in the communities, and we're hoping that all of this will happen. I'm coming over to you, Mr. Ufoma. Chapal Energies was in the news recently for entering a sales and purchase agreement and getting some percentage from an onshore asset in the Niger Delta. So what do you think about this divestment happening? What's your view, and what's the view of Chapal Energies?
Oh, thank you, and thanks again for the opportunity to speak here. I think in order to properly understand this, I think we also need to look at it within the context of what's happening in the global energy space. So as an industry, there's a lot of movement and a lot of change that's happening. And if you look at a lot of the other developed energy markets like the US, Brazil, etc., you see that there is a flight to quality or portfolio high grading. And this is where energy companies historically were given value based on the reserves, 2P reserves that they had available to them. And that was always a function of evaluation. Now the industry has changed and people are looking at cash flow and yield. How profitable are your projects? What's the minimum IRR per project that you are investing in? And the trigger for this essentially is a return of cash to investors. Investors are beginning to look at the industry more like they look at the tobacco industry and to say, well, for the risk reward profile, I want to see a more consistent dividend. And if you follow just the natural resources space in general, it started out with the mining industry a couple of years ago, and it's now trickled down into oil and gas. So it's not unique to Nigeria. We're in a space that is constantly evolving, and there's a flight to quality, and there's a flight towards more cash yield over time. It's less about how many, what's the reserve base that you can book. It's how profitable is your project. Over and above that is the overlaying ESG and decarbonization drive. And it's having a multiple effect. There's money that's leaving the sector. That's institutional money that's leaving the sector on an aggregate basis. And then there are investors that are coming into the sector, but they're coming into the sector with very specific requirements. And so the net effect of this is that we're going to see in the future going forward, fewer but better projects. We're going to see projects that are either carbon neutral or on a pathway to net zero over time. And you will see projects that are profitable through the cycles. And by profitable through the cycles, people are less interested in, what your break even is or what the oil price will be. They'll ask, can you make money at $20 a barrel, at $40 a barrel? I know the oil price will move, but I want to see your baseline profitability. So within this global shift, Nigeria, of course, being a unique, we occupy a unique space in Nigeria. We've had 50 years of, or more than 50 years of hydrocarbon production. This is one of the few countries in the world where you had all major IOCs at one point in Nigeria, and there are very few countries that can speak to that legacy. So it's only natural that there will be a lot of opportunities as people start to high grade. And my sense or our sense is that even with the local companies, at some point, you will also see a turnaround where companies start to, focus on certain assets as opposed to others within their portfolio. So this is a trend that we see in the industry. Chapel Energies, we've been in the news. We were fortunate enough to be able to transact on two very interesting portfolios. We're going through that process with contemporaries in the space. There's a lot of support that's coming from NUPRC. So I want to thank Engineer Neresi here for all the support on the regulatory side, and also the support from NUIMS, who is our senior partner on the back end. They're very quiet, but you feel the effect. So this is the new normal. This is the way the energy industry is going to evolve. I'd like us to think about us as a global industry, not just Nigeria. We are being affected the way other stakeholders are being affected as well. Those are our
All
pieces.
right. Thank you so much, Mr. Ofoma. This is our new normal. So let's look for ways to adapt and make the best out of this moment. My next question will be to Mr. Ibidapo-Obe. Oando, I've known Oando since I was in the university. I've been hearing Oando. And I know that Oando has also been very active during this divestment process. I know they recently acquired 100% shares in a divested asset. So I'd like to hear your view about what this divestment means to you, and what are the opportunities or what are the challenges that this divestment is bringing to the nation. Thank you.
Okay, yeah, thank you so much for that. I think I'll just go off of what Ufoma has already said. He's touched up on a lot of the points, so maybe I won't use my full 3 minutes. But I'll start with a very short story that just came to my mind. We're doing topical issues, as everybody knows. We have the Olympics ongoing. A lot of people will remember, well, I'm sure all of us in the room will remember the Nigerian football team of, I think it was Atlanta 96, that won the gold, Okocha, Kanu, all of them. Seminal moment for us, one of our greatest Olympic performances. We beat all the best teams in the world. What people may have forgotten is that that team did not start being great that day. In 1994, they performed very well at the World Cup. All those players were world-class Nigerian players. So it wasn't in 1996 when they won. And I like that because, Ufoma said, we've been producing oil in Nigeria for over 50 years. The moderator said she's been hearing about Oando since, for a very long time. I say that to say this. We have arrived where we are in an organic manner. It's really an evolution, a confluence of opportunity and preparation. The companies you see today have been preparing for a long time. In Nigeria and in our industry especially, we always talk about technology transfer, knowledge transfer. We've been transferring this knowledge for decades. The government has been extremely active in promoting this. It hasn't just been words. We look at a lot of things as words, but there's been action to back it up. We had a marginal field bid round, I think 2001, that's 23 years ago. So when Nigerian companies were given an opportunity to prove they could do it. So technically, we've been doing this for a while. We're at a point now where the IOCs, respectfully, have to leave. It's not a choice. You can say energy mix, etc. They are leaving the onshore and the shallow water because they have realized that maybe the indigenous companies can do it better. For us, we look at it as an opportunity and an opportunity, not a challenge and an opportunity. It's an opportunity and an opportunity on a global stage to prove, like the 96 Olympic team, that you are as good as anybody and you have all the experience. And this time around, it's time to show it. I think I'll just leave it there.
Thank you so much. Yes, I really love the comment you made about the IOCs believing that we can do it, and that's why they are leaving the shallow waters and the onshore assets. I'll be moving to Dr. Bukola. Matrix Energy has been known for some downstream operations, and recently they are looking at the upstream operations. What's your take on this divestment going on? Just your view.
Okay. Thank you, Dr. Toyin. And good afternoon, SPE Chairman and distinguished colleagues in the industry. From the Matrix point of view of this ongoing divestment, we believe it's a good thing that is happening to the indigenous players in the industry. The marginal field is an entry strategy for us because we know we can start small, but we can't stay small. So at the moment, we are looking at, we've taken 2 of our fields to extended well test state, what some of you will call first oil. And at the moment, we're looking at acquiring bigger assets in the industry. But to speak more on the divestment, you can't force an operator to continue to operate an asset that does not align with their business vision anymore. It is important that we respect the business vision. If the business vision is to focus on deep waters and gas assets, then we need to approve the divestment process on time so that the acquirer can commence full development of that asset. Because if a divestment process takes a very long time, the current operator would have stopped investing on that asset, and then you would start experiencing decline in oil and gas production. And as a nation, we're talking about contributing to the national production of Nigeria so that we can get more revenue, and that would help the economy. So one of the ways around that is for the regulator to probably issue a conditional approval to the new acquirer to start operating this asset so we don't experience decline in the productivity of these assets while the regulator continues to carry out their due diligence on this asset. It's also important for us to note that with the divestment, it's creating a lot of opportunities for indigenous players. But we have few personnel that are quite experienced to manage all these opportunities. It therefore means that operators need to start developing their own talent pool of engineers, just the same way we have the likes of Shell having SITP and other IOCs having their own training programs. Indigenous oil companies also need to start training their own employees so that within a very short time, they're also able to start taking over the operation of some certain leadership positions within the industry. Because whether we like it or not, with this divestment, some of the expatriates or the experts in the industry would also leave Nigeria and go elsewhere. So it therefore means that we need to continue to develop our own talent pool so that we can efficiently develop the asset. And also, and those are my final remarks on this, the entrance of indigenous players into the industry has also helped us to understand that indigenous companies can drive oil and gas development in Nigeria. And we've seen the likes of Seplat and Platform and some other indigenous players investing in gas infrastructures and helping us to commercialize our gas assets, which in previous years, they were stranded assets. So for the new players like Matrix, for instance, we are also interested in responsible asset development, which means while we develop our oil assets, we are also interested in commercializing our gas assets from the beginning so that we can generate revenue for the company, also for the economy, and create job opportunities. Thank you.
Thank you so much, Dr. Bukola. I like the point you said about training our own engineers, and I'm hoping that your company will collaborate, since our council chair said we're in the season of collaborate with Nigerian universities to ensure that as our graduates are leaving, they're able to fit into the various DOCs that are springing up. I would like to come to Engineer Amadasu. What's your view as a regulator? What's your view on all this talk about divestment?
Okay, thank you so much. And once again, good afternoon, everyone. As a regulator, I think it's good for us to put this in proper perspective. First, let's understand that there is no exit. People are only divesting. People are strategizing and coming out with a better way to engage in their businesses. And so they are looking for the aspects of their business that doesn't rank well, and therefore they are strategizing. So that is basically what they are doing, either to raise funds, either as a result of compliance to better energy, drive for better energy, or as a result of ESG, to better reposition their company, for divestment. And it's also good for us to understand that divestment is not new to the industry. There are various ways company can divest. They can go a way of diluting shares. It's also divesting. They can go in a way of abandoning some stranded assets that the regulator has taken, and also following with the provisions of the law and coming out with a very transparent, competitive bidding process that have brought marginal fees asset owner, and we can see that a lot of people are doing well. Divestment can also come in form of you removing some of your shares. And if you look at, when I say they are not exiting, all the IOCs, most of them, they decide based on how they have sweated their assets, they have decided to move, to the deep offshore for reasons that is very, very strategic to them. And it is important for us to note that. Number two, as a regulator, it's important for us to also know that ours is to implement the provisions of the law. Based on what is going on, we have come out with 7 pillars. 7 pillars to say when you want to divest, after you have also worked with your co-operator or co-venture, like if you own a share, and both of you have agreed that
you want to divest this share or I want to take it over. You sign off and then come out and follow what the law says. We have come out with 7 pillars that you have to follow clearly. Number 1, the regulator want to be sure that the buyer of your asset have the financial capability, not just only to buy the asset, but to continue to operate the asset upon taking over the asset. The second one is your technical ability, capacity, to be sure that anyone taking the asset should come out with a clear work program, because one of what the regulator will also encourage as a business enabler, as a promoter of investments, using all our regulatory tools, is to ensure that you have a clear work program that you want to subject the asset to, in order to take it from where it is and to take it, higher, either by production increase or increasing on the reserves. Number 3, we talk about data repatriation. Everybody understand and in line with the provisions of the law that when you are working on your asset, as you drill, as you explore, as you operationalize your asset, your operational data, the data you acquire does not really belong to that operator. It belongs to government. And the provision of the law says repatriate this data to NDR. But before you hand over this asset to whosoever you are diluting your share or divesting it to, the regulator wants to be sure that such data has been domiciled with the NDR in line with the provisions of the law, such that any other person taking the asset can have access to those data. Number 3, we want to be sure that there is no legal encumbrance on that asset. If there are legal encumbrances, it means when you divest the asset, the only person on the asset is going to have problem in managing the assets. The 5th one is that we want to be sure that your decommissioning and abandonment, which you have taken and booked in your booking, in your book, that certain volume of money has been taken and set aside for your decommission to decommission assets when finally you want to hand over that asset to government. We have seen cases in UK, in Ecuador, in Brazil, in New Zealand, where assets are divested. And eventually, the decommissioning liability will now be bought by government. That is not what we want. We want you to properly situate the fund that you have booked you have removed from your book, and situate it such that when you are not there tomorrow, the person that is taking over the assets will have that fund to be able to restore the asset to its original status. The other one is talking about labor and labor issues. We don't want you to hand over an asset that is full of a lot of labor issues. So we want to properly dimension all of all this. Those are the things that the regulator will approach and say, sorry, there's a clear regulatory provision, there's a clear regulatory framework that you have to adhere to. The other one I just want to situate, in the course of this discussion, is that we hear that regulators sometimes hold on to assets and so they are not allowed the process to work. I think that is not correct. The last time my chief executive also made this presentation in energy, it was clear. He presented that to everyone, that this entity, they have concluded their own. This entity, they have concluded their own. This other one, we are still waiting for them. The last one that someone mentioned just now, just 3 weeks ago, that's when they submitted their requests for consent to the regulator. And within 1 week, using our regulatory framework, our people acted on it, and it's done, and we have ordered it to the appropriate quarter. It's good for everyone or us to know that in asset divestment, there are opportunities. And there are also challenges. So what are the opportunities? We have mentioned here that surplus. Share those they divested part of the assets. And today we see what surplus is doing with those assets. Some of those assets that were abandoned, stranded, that operator or IOCs did not touch, we can see what the marginal feed operators are doing with them. Just going around just now, I saw a lot of them. Some of them have grown so big. So the opportunities are there. But what we have also not see as a regulator is that we continue to focus on just only sweating the asset by way of getting production. If you do that in another 7 years, when you subject this asset to continual reservoir performance assets and all that, you are going to be taking yearly decrease. And so a time will come, if you don't go into exploration activity, to get more production will be difficult. The research is there. It's not only just you're producing them. You must engage in conscientious efforts to go into exploratory activities so that in another 7 years, in another 8 years, you continue to ramp up your production.
Right.
I'll stop for now. Thank you so much.
Thank you so much, Engineer Madasun. You agree with me that we have very seasoned professionals in the panel. They are giving us very useful insights to the divestment process. I would like to hear from you, Mr. Olariwaju, on your overview on what is going on in Nigeria in terms of divestment. 3 minutes, please.
Okay, thank you very much. Last but not the least. I think the last speaker, he really delved into the topic. Thank you for this opportunity. Divestment is actually not new. I mean, there's been a flurry of activities since 2009, 2010. But if you cast your mind back to about 2000, when the marginal field rounds, the beginning rounds came, and that was aided by the fact that we needed to have indigenous participation in the upstream oil and gas industry. That came, and then in 2010, I think the Seplat divestment, Shell divestment to Seplat, 45% equity to Seplat, that's almost 438-41. And then 2012, another round of divestment, NEPL and its JV partners, 2015, the Chevron divestment, and on and on and on like that. But what we have noticed in recent times is a different variant of divestment. I think this is corporate divestment, where you have bulk portfolio divestment. So it's not single OML divestments. So we are used to having newbies coming on single OML divestments. Now you have a large portfolio of divestments. Yes, you've mentioned Seplat. I will also add First E&P. I think they've done fantastically well. First E&P does like 55,000 barrels a day. I think they've done fantastically well. And that's good. The import of this is this. Now, this topic is very relevant because over the last few months, we've been hearing of MPNU, that's mobile producing, SPDC divesting. Those are giants. And I mean, it's an open secret, it's in the news. The import of that is this. In the coming months, when they finish the process, just as Mr. Madasu alluded to, production, currently we are about 30%, indigenous companies contribute about 30% of national production. You're going to move that production from 30% to about 60%. And that has implications for the local guys. I mean, the future of the country is in your hands. It means it's as if we are finding local solutions to local problems by local producers. So we've gone all local, but then our future will be in your hands. But having said that, challenges, opportunities, the divestment comes with those challenges and opportunities. Basically, the major challenge has been around security related. And so it's a bit external to these operators. In terms of security, I think we've done a pretty good job over the past few months. National production is about 1.61 million barrels. And that's thanks to the new security architecture that we are embracing. And we'll do more around that. But by and large, I need to point out one big challenge that we have in terms of challenge with the indigenous producers. There's a challenge of corporate governance. You find out that we need to institutionalize strong corporate governance within that space. We'll find situations whereby directors of companies are also participating as contractors within the same company. I think so. That is one snag that we need to take care of. That's one of the things that I think is part of the lessons learned. And as time goes on, I think this will fizzle away. In terms of opportunities, like I said, I mean, we're going from 30% indigenous participation now to about 60%. So the whole industry is going to just be in the local hands. And is there a risk associated with that? We can discuss that. Maybe the subject of discussion. The other part is this: whilst indigenous players they've gone out to look for funds to buy these equities. Now they need to meet up with payments, and so they're running to quickly develop those assets without practicing sustainable practices. So you're rushing to, and that's you're doing, and then you have bad reservoir management processes and the likes. The regulator is here where they do their normal MER test and their technical allowables and things to help us in that respect. But these are little minor challenges that we've seen thus far. I think in the course of the discussions, you will hear more around
Thank you so much. Thank you so much. Please, can you put your hands together for the distinguished panelists? While sharing their views, they've talked about the opportunities, a lot of value creation, job, capacity building. They've also said that there might be less restiveness due to the divestment going on, since locals will be in charge of those assets. And they've also looked at some of the challenges that may spring up in terms of financing these assets. And our regulator gave us the 7 pillars that are being used to screen the transaction going on between the DOCs and the IOCs. Okay, so I also like what you said, Mr. Olarewaju, about some of the challenges that may spring up in terms of how you said they might just rush to produce the field without going through the necessary steps. So what do you think the DOCs can do in terms of technology adoption and operation? How are they addressing these challenges of technology adoption and operational efficiency as they are taking over these assets from the IOCs?
Oh, okay. That's for me. Okay. So I don't want to use the word exit because the regulator has warned us they're not exiting. They're just maybe okay, they're divesting. Now, once that goes, that comes the challenge of that technical expertise becomes a challenge. So for local companies, they need to develop technical partnerships and also with the OEMs. So you would need to build, you need to partner and collaborate with international service providers, OEMs. That has to be in place. You need to be deliberate about developing local capacity. We are developing local solutions to our local problems. Okay. So you need to be deliberate about that investment. I mean, if you don't make that investment, just the same way that I think the regulator alluded to the fact, you talked about natural decline. Now, if you're not investing in exploratory wells, you're going to have natural declines in the wells you're drilling. If you're not investing in capacity building, you're going to have problems down the line. So those two things are very important. And then you have to be strategic about it, And then the last one, sustainable practices. So you find out that just in a bit also, in terms of financing now, let me just swing to decarbonization and then the climate change challenges that have come with it. So the nexus between indigenous companies monetizing oil and gas resources and also meeting up the challenge of sustainable practices. That is a bit of a challenge also that I think that going forward, you might need to look into. Thank you very much. Thank you so much,
Mr. Olarewaju. Please, let's put our hands together for him. So you talked about how indigenous oil companies should develop local capacity, local solutions to our local problems. And I'm hoping that the DOCs that the DOCs will start thinking of creative ways of building capacity such that we have enough manpower to man these assets that are being divested. The way the international oil companies are selling off their land assets, there's this fear, especially in their land assets in the Niger Delta, there's this fear that they may not address all the environmental issues that are plaguing the Niger Delta for a couple of years, over 50 years. The environmental pollution, the social strife, the governance issues created by their operations for over 60 years. And the way DOCs are also taking over. DOCs do not have as much resources as the IOCs have, and they obviously have less experience because they are just bringing up. So there's this fear that could this environmental problem get worse or will it be better? How do you think, I'm asking this question to Mr. Ufoma, how do you think the issues of environmental, social, and governance performance can be addressed?
Thank you. I struggled a little bit with the premise of this question because I think that we fundamentally need to rethink how we address this issue, because there's a danger that we see the responsibility for remediation and community management, etc., as the responsibility of the IOCs who are exiting. And the sense is, okay, they are going, let's kind of grab them, before they go and, oh, they've gone. And is this sort of despair and despondency? We've been producing hydrocarbons in Nigeria for over 50 years. If you look at the laws, Nigeria is very, very unique. We have a fantastic heritage. We were one of the first emerging market countries to come up with a comprehensive revenue sharing formula where we got a fair take versus the international companies coming in. And for a very long time, Nigeria was at the forefront. I mean, a lot of people forget that we were building refineries in the 70s. We were the leader in this space for a very long time. And if you look at how the waterfall works when you sell crude oil, right? You pay your royalties. There are lots of deductions there. NDDC, their community host fund, education tax, etc. These things have been there for a long time. All of these leakages don't go to the IOCs. They come to us as Nigerians and our institutions to manage. So after 50, 60 years, the question is, have we been good stewards of this oil wealth? And have we taken care of our fellow brothers and sisters in the creeks? And if we can look at ourselves honestly and say, we haven't done a good job, or we haven't done as well as we should have, the question then is, in this next cycle, for the next 50 years, how are we going to do better to make sure that the other half of the population is not left behind? I remember when when I moved back to Nigeria, when we did our first acquisition, a big OML in the Niger Delta, and we went into the creeks, talking to the communities to put in place our security arrangements. It was very interesting to listen to these guys talk about how they wanted better. Nobody likes the bunker. It's not a pleasant thing to do, but they had no opportunities. And so the question really is, what are we going to do and how are we going to do better in the next 50 years that is to come? Part of the reason why the IOCs are rationalizing their portfolio is that technology has now opened up a lot of basins that was historically not available to them. And so there's more optionality. But that technology is also available to us in Nigeria. So for us as a new entrant and, for the wider industry, I think we should change the premise of that question. What are we going to do for our country and the people in our system and our stakeholders? It's my responsibility. It's your responsibility. It's not for the IOCs. They look after their countries. They pay dividends to their shoulders. They pay taxes in their countries. This is for us.
Okay, thank you. So it's our responsibility to take care of our environment and to ensure that everything is stable. Thank you, Mr. Ufoma. Engineer Amadasun, while you were talking, when you were telling us about the 7 pillars, you mentioned some of the complexities that divestment could bring. And some of it include environmental issues, legal crises, vandalism, like we just already said about the question Mr. Ufoma addressed. And you also talked about how they have to talk about the commissioning and abandonment in the entire divestment plan. So all these things can really be a lot of work it can be daunting, it can be a lot of work, putting all this together during the divestment process. So I know you've told us about the 7 pillars, but how else can the government further support the divestment process and make it easy for the DOCs that are coming in? Easier.
Okay, thank you so much. Just to take it from your last statement, how else can the government support? First of all, is to provide clarity on what the expectation of government is when you want to carry out any transaction, and to make it very transparent, to say, and to bring out the procedure and the framework that you want to follow, so that when you are going to carry out that transaction, you already know that this is the route or the path you have to take. I think basically the regulator, has done that. At the beginning of this year, the chief executive of NUPRC also came out with what we call 20 points or regulatory action points that will make anyone that want to work to be able to predict exactly what you want to do. And the regulatory action plan also remove every form of uncertainty, such that when you want to do anything, this is how you want to do it. We have also automated our processes in the system in order to enhance efficiency within the system. What we are presently doing now is that we are developing guidelines for all our operations, and when these guidelines are developed, working collaboratively with the industry, they will be put on our website, such that before you put it out for any application, before you bring out any application, you just go to NUPRO website and follow the checklist. When you get your application to the commission, within 48 to 72 hours, commission staffs are obligated to sign off and complete that application process. We are also looking at bringing more transparency on how we account for hydrocarbon. The Federal Executive Council recently signed that one off, and the Commission is going to work with technical experts to get to the industry, where every measurement, every instrument that is used to account for hydrocarbon in the industry is properly audited, vetted, and gaps are identified, and see how we can then work with the operator to close that one out. In addition to that, our regular engagements, we are talking, just like my colleague said, taking production to the next level. We are going to be engaging the operators constantly, some on weekly basis, some on monthly basis, to identify those challenges that have not allowed you to unlock hydrocarbon within your space. That we are going to be doing with you. If it is regulatory, we quickly see how we can work on that and remove the barrier. If it is any other one that concerns other stakeholders, we'll see how we can even help you to engage them in order to remove the barrier. We are coming out clearly with all regulatory processes to remove all entry barriers, whether it's be approval process, whether it's been a bidding process and all that. So all this we are doing to further enhance and how we can work with you. I think for now, that's what I will say. Thank you.
Thank you. Excellent, Engineer Madasun. Thank you so much for sharing that with us. So now you all know that there will soon be guidelines on the website. You can go there, check, so you know what is required of you. They are taking off all the barriers. There's going to be clarity on the expectations, so you know whether you qualify or not. And it's good to know that the government is supporting this process. And we've talked about environmental issues, and Mr. Ofoma has told us it's our responsibility. We should all see it as a responsibility to keep the environment clean. However, one of the issues with the DOCs is still the communal issues, And I'm taking this question to Mr. Ibidapo-Obe. How do you think there will be less sabotage and vandalism in our infrastructure when the DOCs take over?
I'm wondering the best way to answer your question. It's very similar to Ufoma's question, and I don't want my answer to be identical to his. So I'll make my answer similar. I think, first of all, it's a mindset. There's a mindset issue. We need to ask ourselves, have the IOCs managed the communal issues well? So if the answer is no, then why do we assume that the Nigerian companies would somehow handle it worse? Because that's how, the question kind of made me feel like, how would we Nigerian companies now handle the communal issues? If you look at our history, I speak for Oando in particular. Actually, I tell another quick story. In 2008, along with our partner Energia, we began production in a marginal field, OML 56, a Bendo field. At that time, there were communal issues in that community. We drilled our well. When we started extended well test, we had to truck about 8 kilometers before our pipeline could be complete. At this time, we knew that the community issues that existed then, we couldn't approach it the same way that IOCs had approached community issues. We started thankfully, because also we have to give kudos to the government in the way the PIA was developed. It seems like a sidebar, but there was a lot of engagement with indigenous companies, with IOCs, with the communities. At that time, and we were very involved in engaging with the government, we started a host trust fund. It exists still today. In 2009, it was the first. That we gave a percentage of our profits to a trust fund that had the community, the government, as well as ourselves and our partners. Every year, you would look at what's in the account. You would select projects that you carry out, will be monitored, and these projects were carried out. We're in 2024. We have not had any community issues to date. We're producing, we're drilling, and everybody is happy. So it comes to, there's a sense of ownership. And I honestly believe that as a Nigerian company, as Nigerian companies, we have more of a sense of ownership in the areas where we operate. It's not something that we have to learn. This is our home. Your home is your home, and you want it to be nice. So that's the kind of mindset that I believe indigenous companies are taking into this. So when Ufoma says the responsibilities for all of us, he's not saying that there's no responsibility to Oando, to Chapel Energies. He's just saying that we're in a better position to ensure that the government is held responsible. We as corporates are also held responsible, and we do what we have to do to ensure that there's development. Sunlight is really the best disinfectant. The more that you develop these areas, the fewer problems that you would have, because people have things they're doing. Nobody wants to be a bunker.
Thank you. Excellent. Thank you so much, Mr. Ibidapo-Obe. I just want to remind the audience that you can share your views and your questions using the app, and we'll get to it very soon. But before we go to the next question, I really like that point you raised about how Oando has a trust fund for the communities, and that has also helped in the community collaboration with Oando, and you're not having any vandalism in your field, which I'm hoping that the companies here would also learn from this and set up such funds if they don't have that yet. Engineer Amada Soon would like to make some comments on this question.
Okay, thank you so much for the submission. I align with you and also with my friend Ufoma. The truth is that there are some communities today that the operators don't even need mopos to walk around. I have visited some of the operators. They will tell you, oh, let's go to the wellhead, let's go to the flow station and all that. They say, you want to go with mopo? They say, no, you don't need mopo to operate in this environment. What's the reason for that? Because of the social network they have built with the community with respect to ownership, making them to understand that they are also part of the business. They are stakeholder in the business. And so if you look at the provisions of the law, that is why government decided to come with that host community development trust fund, where every operator will have to bring out 3% of your operating cost of the previous year, set it aside and pay it into the fund that the community, based on the trust fund that they have set aside, that they will now agree on what kind of developmental projects they will bring to the community. We believe that bringing the community included in to be part of the business that is going on, just like he has said, this will bring more social inclusivity, and this will bring the much desired drive to have to operate freely in our communities. Thank you.
Thank you so much, Engineer Amadasun.
Moderator, please, before you continue, forgive my interruption. I've just been informed that there's a technical hitch with the web app. So if we're going to take questions, we have to do with the conventional way with microphones. I have watchers on standby for that.
Okay. So we all got the updates. We'll be taking the questions in the hall here, not using the app. Okay, so thank you so much, Engineer Amadasun. And it's good to know that the regulators are already proposing ways that the DOCs can collaborate, by when the DOCs are, having a trust fund for the communities and, seeing the community as a stakeholder in their operations. So, Mrs. Folashade, among other issues that host communities are requesting for, one of the things they are requesting for is right of first refusal during the divestment process. And with all what we've been discussing here, I think if they are granted this, it will help them collaborate more with the company. They will see themselves as a stakeholder, and it will help the process to be better. However, I would like to know what the law says about this. This is me thinking. So what's the legal view on this? Is it okay for them to ask for a right of first refusal?
Okay, thank you for that. So first off, just to say that they're already stakeholders. So whether they have an interest in the assets or not, they are the ones that cohabit or live in this area, so they're stakeholders. And I'm sure the companies, the regulator, everybody recognizes them as stakeholders. And that's why, when the PIA came, one of the most innovative provisions to my mind was, or is the provisions on the host communities. Now we have clear rules, that seek to address, the issues. So now to the right of first refusal. So the first thing to say, I think the first time it came up was on the Shell divestment. I may be wrong, but I think that was when they first asked for that right of first refusal. And I think it's important to understand what a right of first refusal means, at least from a legal perspective. And so a right of first refusal is a contractual right, actually, that a party to an agreement has so the agreement, usually a shareholders agreement or maybe another agreement, has to match or refuse to match an offer by a third party for that asset. So just to break it down, myself and Ufoma are maybe shareholders in a company. We have a shareholders agreement amongst ourselves. And one of the provisions of the shareholders agreement will say, if somebody offers to buy your shares, you have to give me a right to either match that offer or decline to match it, and then you can sell to the third party. So basically, just a right a contractual party has to ensure that I have the opportunity to get an asset if I want to. So with that explanation, the first question that you ask is, what contracts will be between the host communities and the IOCs that would, give them such rights. I don't know that there's any. I guess maybe they just used the terminology loosely, without necessarily understanding the legal implication of what they're asking for, because it's impossible, to the extent that they don't have interest in these assets via a contract, or maybe that they have an interest that has been given to them by the government in the assets, and then they now have an agreement with the JV parties where they can exercise such rights. So it was just a fundamentally flawed request from the get-go, because they don't legally, it's impossible. But then, I think we've overflogged the issue here as to what they want. And I really love what Mr. Ibidapo-Obe said about, and Mufoma, of course, about when you are doing what you're supposed to be doing for these guys, just maybe they wouldn't, make unnecessary demands, and then maybe they won't be as restive as it is. So I don't want to go into the issues that have been debated, but on the rights of first refusal, I just think that it was just a fundamentally flawed request that has no legal basis, really, to the extent that there's no contracts between them. Thank you.
Okay, thank you so much, Mrs. Folashade. You'll agree with me that our panelists have been doing so well, giving us very excellent views on this topic. Please, can we put our hands together for our panel? Thank you. So when we started this discussion, we talked about how the IOCs are divesting from fossil fuel. They moved, most of them moved from E&P to energies, changed their names. And so as a result of this green energy transition, the funding for fossil fuel has become more challenging. So even there was this COP28 conference last year, and after it, there was a pledge to triple renewable energy in Nigeria. Nigeria also took the pledge. So now this even makes the competition for limited funds very, difficult. Now we have the renewable energy sector competing for funds, and we have the fossil fuel competing for funds. So I'm asking Dr. Bukola, how do you think that successful bidders can assess funding for sanctioned oil and gas projects and operations?
Yeah, okay. Thank you, Toyin, for that question. I'll answer that shortly. Just permit me to quickly complement what the last speaker had just said. So with respect to the first right of refusal being requested by the community, why it's not a valid legal request, but should they seem themselves technically and financially capable of operating an asset, I believe the channel to go about that is to approach the regulatory authority on how to be awarded an oil block. Because we've seen state government being awarded an oil block as a result of that. So they just need to demonstrate that they have that capacity to do so. And I believe the regulatory authority will do the needful. With respect to raising funds in the midst of diversion of funds, typically meant for oil and gas business to the renewable energy space, it is important for us, especially in Africa, to understand that while energy transition is real, for us in Africa, it's a gradual process. It's not an aggressive transition to renewable energy, because we still need our fossil fuel production to help us with other development activities, including investment in greener technologies. And so funds will still be available for fossil fuel development. However, for an operator to raise funds from the market, it is important that the operator satisfies certain requirements first. And the question, part of it, Mr. Madesu mentioned, as the operator been able to demonstrate that technical capacity, do they have a means to demonstrate the commercial viability of that asset? So if you're given $5 million, are you able to demonstrate effectively, after benchmarking your budget with industry cost, what you would do with that funds? So if you're able to satisfy those requirements of being technically competent to operate the asset you've been awarded, then you have two major options. You can access funds from the market. So the first option is equity financing, which means you need to look for strategic partners that has business visions that aligns with yours as well. And these strategic partners does not necessarily need to be upstream players. They can be individuals from the midstream or the downstream business, or even from other industries, but they have access to funds that they can afford you for your development. So in exchange for a certain percentage of equity, then the funds can be made available. The second option, which is more common, it's the debt financing option, which typically takes two approaches in the industry. So the first is the contractor financing. So you have your work program approved by the regulatory authority, and you have clear timelines and project deliverables that you want to achieve. So the question is, which oil field service provider can help you work on each of those projects that you want to deliver, so that you can take that asset from ground zero to ground one? What I mean by that is taking that asset, which at that point is a high-risk asset or a non-producing asset, from that current state to a commercially viable state, which is maybe take it up the way to first oil production, such that you're able to generate a competent person's report, get your field development plan approved, and then you're able to go and explore other traditional ways of raising funds. So what that means is, so with the contractor financing, you engage service providers that are able to provide those services, have an agreement with them based on a flexible payment plan, guaranteed by maybe the shareholders of the organization, and you're able to hand over these operations to the oilfield service providers because they have a skin in the game. And based on they provide the services, they take you to the first oil. And once you start your production, definitely you're able to explore that traditional means of raising funds. And then you can start paying back for the services that have been rendered. The other option is offtake financing. I believe that if you're producing your oil and your gas, you shouldn't just sell it to anyone that wants it. Whoever wants to take your product should also work for it. So you can also look for off-takers that are interested in having a skin in the game. So if you're going to offtake my products, then there should be some sort of funds that you can advance me to develop my field, and in exchange for exclusive right to offtake my products, in this case, the oil and gas. Now, once you're able to take that asset from ground zero to ground one, which is taking it from non-producing asset to a producing asset, then you're able to explore traditional banks for a term loan that would not allow you to expand your field development program, which may mean investing in additional infrastructures, drilling additional wells to ramp up your production. Now, one of the interesting things that has happened recently is the creation of the Africa Energy Bank. And I want to believe that industry players are currently preparing to submit their applications to Africa Energy Bank so that they can finance some of their projects. So I believe in summary, to raise finances is that it actually starts with the asset owner. So it's not a one size fits all because it depends on the state of your assets. But what is important is you have to de-risk the assets, and you may not get that through traditional financial means. You have to use your contractors or your off-takers or your angel investors, as the case may be, to take that asset to a commercially viable asset, and then you take it from there with other means of financing an asset. Thank you.
Thank you, Dr. Bukola. So you talked about equity financing, debt financing, uptake financing, and approaching the Africa Energy Bank. Thank you for sharing all of those with us. I know Mr. Ofoma was, or still is, I don't know, an investment banker, used to be. So I'd like you to just pitch in, say a few things about how the DOCs can access funding.
Thank you. I left banking a very, very long time ago. So I think, first of all, it's important to note that post the financial crisis of 2008, it's actually been very difficult for businesses to access funding. And this, again, I always like to look at Nigeria within the context of what's happening in the wider energy market. And so it's not necessarily unique to us. I think Nigeria had a particularly difficult macro over the last couple of years, which has made funding, especially dollar liquidity from the local banks, challenging. But I think, fundamentally speaking, capital for upstream is hard, and it's going to get harder. And I think the sources of capital are going to become a lot more bespoke. Like Dr. Bukola said, you have to look at your off-takers, you have to look at your OEMs, you have to look along that value chain. And one of the things that we also need to think about, because it's good for us to celebrate milestones. Milestone is acquiring an asset, but there's the day after. And is that after you've bought it, what do you do next? And I think one of the lessons that we've learned from previous divestment rounds is that it's the Coke bottled effect. You turn on the tap, the oil gushes out, but it starts to decline. How do you then attack that decline and ensure that you have consistent production in the years to come? That is the challenge. And it's again, it's not so much about the funding to buy the asset. I'm more interested in how do you sustain that work program over a period of time, especially when your capital allowances are running out and you're having to pay taxes and royalties to the government. A big part of that is, again, talking to your senior partner in the JV, most of the JVs. NEWIMS, is a senior partner. And I think in this next dispensation, looking at ways of ensuring that we're not relying on the old system of cash calls. So alternative funding structures and other creative ways in which we can carry JV capital budgets forward is going to be very important. I think in looking at options for financing, we also need to try and cheapen the cost of development. Nigerian cost of development in Nigeria is particularly high, benchmarked across, other emerging markets. If you look at some of the major developments we've had in Nigeria, and this is both onshore, offshore, and you compare that cost of capex per barrel to Brazil, to Angola, etc., Nigeria is very high, and there are things we need to do with local content, creating competition, making the market more dynamic, so that we can do the same thing or do more by using less, so that our money works more for us or goes a lot further. I think it's very, very important. And I think the final point in terms of capital, a story that, I'm borrowing from my colleague here. The story that is interesting for me is, if you think about how the shale revolution started in the US, it wasn't driven by the big energy corporations. It was the small firms at the time, Devon Energy, Chesapeake. These were a bunch of engineers, sitting down and thinking about what do we do, right? At the time, the big corporations were all looking for assets overseas, right? They had these rocks, they were undulating rocks. Horizontal drilling wasn't necessarily, that effective without, fracturing the rocks. And they started one well at a time, one test at a time. And then the money started to come in trickles. So I think we also need to be pragmatic and maybe move away from the big numbers and think about how do we start, this revolution, this next 50 years, one well at a time, ensuring that if somebody gives us capital, we're able to execute that project on time and on budget, return that money, and then go back for more. And we start to build confidence, in the market.
Thank you so much, Mr. Ofoma. So I think my next question is for you as well. We already talked about how the divestment is making some of the expatriates leave the country. And there's this fear, although we already talked about how we should train our engineers to take over. I don't know, do you have any other ideas on how we can maintain critical competencies in the industry, so that as the expatriates are leaving, the knowledge they brought is not living with them? How can we maintain critical competencies for the effective management of these divested assets?
So my response to this is actually quite a personal one. If you look again at Nigeria as a country, we have a fantastic legacy of talent in the industry. Again, we've been at this for a long time, and you will find that there are 2-3 generations of experienced hands who have retired and left the industry, and that knowledge is still there. And I remember very well when we bought my first divestment, again, very big assets in the Niger Delta that we're all familiar with. Our CTO at the time had retired, he was Nigerian, was living in Canada, and he had been a trainee engineer with Shell, and he actually built some of the flow stations, at the time. He started working when he was 17. And I will never forget the day we showed up to hand over after you've bought, and we get the certificate from what was DPR at the time. And you go with your certificate to take over. And we had all the Shell engineers and staff, the overalls and the boots and the safety jackets and the protocols. And he showed up with his T-shirt and he said, "Where's my asset? What have you done with my flow station?" And he told everybody to leave, and we started again working that asset, and we had fantastic success, in the first 2 years. I think we need to tap into that institutional memory, right? I think everything that we are buying is brownfield. There are people who have worked these assets before. It's not new. We're not doing anything that hasn't necessarily been done before. I was talking to one of my contemporaries, Alex Aruna at Oando, and he was telling me about the plans and all the things that they're looking to do on their asset that they're acquiring on the E&I portfolio. So I think, yes, we need to invest in talent. It's a global industry. We need to look at people inside. We will need to bring expertise from outside. That's the way the industry works. It's not unique to Nigeria. But I don't think we need to be afraid. Nigeria, again, has a fantastic legacy here. We're not Namibia. We're not new to this. We're not any other country. And we will go into this next phase with a lot of confidence, knowing that, we'll be standing on the shoulders of those who have done this before us, but we'll do better.
Mr. Ufoma, I've just been told that we have about 10 minutes left, for this discussion. So I'm just going to ask one more question to Mr. Ibidapo-Obe, and then we can take comments and questions from the audience. What do you think are the implications of these divestments on Nigeria's overall energy security and economic growth?
That's the first question you've asked me that's not similar to Chapel Energy. I was preparing for another question. I think in terms of energy security, it's not a problem that we have now or that we've had in terms of having our production in jeopardy because of it being managed by IOCs, if I understand your question. So traditionally, we have a senior partner in NNPC or generally that has a majority interest in all these assets. So the reserves are here and the production is here, it's ours. When I try and zoom out your question and you say energy security, for me, what that means is how much of our actual production are we utilizing here for our own needs versus how much of it is exported or somehow lost in other ways. And even in that, we've had and we continue to have a lot of progress. If you look at this, it's a lot of it is actually quite intertwined. You have to look at the small successes that eventually add up to the big one. I'll give you an example. If we put it into a narrative, we have over the past few years we've completed OB3 pipeline, we're on AKK now. He spoke earlier about financing, which we could look at as a challenge. But at the same time, we know the Energy Bank is coming up. We're talking about leveraging on some more interesting commercial structures, looking at things like your off-takers. Now, we can actually have, and we should have, local off-takers that would be able to finance these projects. And that leads to a lot more energy availability and security. I'll give an example or a hypothetical. Assume that the law says all financial information for Nigerians must remain in Nigeria. We now live in an era where everything is in the cloud. So if all your information is in the cloud, you actually don't know where it is. It could be anywhere in the world, so long as you have access to it. So if we had a law that said financial information must be in Nigeria, the United States have it. You can't have United States military information anywhere else. So that means you must have data centers located in Nigeria with all financial information in those data centers. Assume for that we have existing protocols. We have power issues. Where would you put these data centers if you're an entrepreneur? A natural place would be in the Niger Delta near the oil and gas assets, even the marginal fields. So I have a marginal field. I have gas that I would ordinarily be paying maybe a flare penalty on. If I can find someone who will finance data centers, that same guy can finance drilling of wells for me to then be able to provide a service down the chain. So the whole chain is connected in a way that Nigeria would have more energy security. We have the reserves. What we don't have is the production that we should have with our reserves. So we have a very low reserve to production ratio. So the demand is there, the reserves are there. And I think in this next chapter, what I'm going to start calling the next 50 years, indigenous companies will actually lead the charge to bridge that gap between the demand that's there and the reserves that we have.
Thank you so much. Thank you so much to the audience for responding, the panelists for responding to all of these questions. So we'll be opening up the question sessions to the audience. So the audience can now ask the panelists. You can ask specific panelists your questions, or you can just ask the panel itself, and would choose who will take the question. And Mr. Richmond will help with that.
Yes, there's a mic in the audience. So I have if there are no questions, moderator, I guess. Come this way. Come in this way. We'll take just 2 questions. The first 2 ones I see that went up. Come here. Yeah, the gentleman in the green cap. Where the mic? The gentleman in the green cap. We'll take the 2.
Thank you very much. All protocols observed. My friend from the Upstream Regulatory Commission, we are friends, so I won't want to say things that...
Sir, please, if you can tell us your name for the sake of the panelists.
It's my name.
Thank you, sir.
I'm a retiree. Now, regulators, we have a situation. So let me go to something that is happening in electricity generation. We have DISCOs, and then we have the regulator. We now have a situation where the DISCOs regulate the regulator. I'm not saying something like that is happening in DPRO. Old DPRO. The rules, all these regulations that you have talked about, brilliant, very good. But how come that each time we have a bid session, there's so much outcry out there? How is it that you cannot tell the powers that be, this is the way we want to do our job? So please leave us alone. Let's do our work the way it's supposed to be done. That's why I talk about the regulate. They are not, you talked about putting money in competence. That is key. The private people, when they take this field, they are more interested in production. But we expect that DPRO or the regulators
NUPRC
are there to ensure that you do the needful. You must invest in developing the field. But these Nigerians who have gotten this field produce. The next thing is water content begins to rise and they destroy this field. Where are you when all these things are happening?
Thank you, sir. Just hold on before you answer, sir. The person behind.
Yes, so just a little contribution to Dr. Bukola Olushola and a question for Mr.
Sir, please, your name and affiliations, and please use the mic so they can hear you.
My name is Dr. Justus Adeleke from Aradel. So a little contribution to Dr. Bukola and a question for Mr. Olariwaju. Now, with the divestments and the opportunities to develop the fields, we have young engineers that we are recruiting. We need to train them. You mentioned that SITP used to train Shell people in those days. Now, SITP came from Robert Gordon. Professor Babs is here. But we moved away from that in Aradel. So what we've done is to develop training curriculum for 12 years in the academia and over 30 years in the oil and gas across several countries. So we have members of faculty that have 30 to 40 years of experience worldwide. So we are training these young engineers, robust curriculum from petroleum engineering to production operation, to refinery, to commercial, to legal, to finance, name it. So what I'm trying to say is that we need to go with the proactive activity which the MD of Aradel has started. We need more training for our engineers, and we could collaborate. If you need Aradel assistance, your engineers can be trained. So that's what I'm going to say. We have 25 of the engineers coming to this workshop. SPE. 5 of them are presenting papers. So they are physically here. 5 of them are presenting papers. So they've gone through a whole year, starting from January till now, and they are finishing their training in November before we start to think of other batches. So other companies, marginal oil field producers need to look at this, not make money, but invest in young engineers. Now, my question to Mr. Olariwaju is that security is a challenge, as you said. Security is a challenge. Maybe unit cost of production, maybe 30% of it goes on security. We have MOPO, we have police. We have gone arrive at the airport and found 2 or 3 police come to escort us to base. So it's huge. The question is, how can we reduce this cost of security? What else can be done? The cost of security is much more than when the IOCs were operating. Thank you.
Okay, thank you. So, Engineer Madasun, your question, please.
Okay, thank you so much, sir. If it's difficult to find UPROC, sir, just call us the commission. Just call us the commission. Okay, so we need to understand where we are coming from and what the law has provided and what used to be and what it is now. If you follow through, you discover that dimensioning what exactly you said is no longer what is happening now. In one of the SBU in the commission that I had, the development and production, We have unit that is looking at reservoir performance, looking at it from the industry. We have a unit that is looking, carrying out performance on all the assets on quarterly basis. You also have a field development unit